Today it was a masterclass to know about all the careers in finance.
Most of the people in the market, they don't know that they don't know. If by luck they make money, they start believing that they have the skill set to make money. Depending on your mindset and what you like, you can make a good career on it.
Do you foresee in the near future a fund house which has only AI fund managers and an AI research team?
That is difficult to imagine as of now, but AI for sure will be a very, very powerful tool to help the fund management team.
If somebody is interested to be in the research and fund management space, along with the MBA, CFA is almost like a given.
For example, my son, and he was doing his CFA. You won't believe, I did my CFA 3 years back, at the prime age of 54, 55. If you are actually interested in making a career investment, I will strongly recommend that you take the CFA along with your studies.
Hi everyone, it is my pleasure to welcome you to a very special episode of Future You. I would call this the CXO series. With me, we have the pleasure of having Mr. Santosh Kamath, who is the President and CIO of Franklin Templeton Alternate Investments. Santosh sir did his MBA from XLRI way back in 1993. After that, he entered the mutual fund space, research space, and since then, he has been very active in the space. I would say his experience in fund management and research is as old as it can get. He is doing this for the last 30 years. So I'm sure there is no other person as good as him who can guide all of you when it comes to the entire career space, when it comes to research and fund management. So welcome Santosh sir. Let's get started.
Thank you, Iman.
I'm sure over the last 30 years, you now have a very good experience of all the careers related to finance. So it will be of great help if you can tell the students about the various careers that are available in finance at a very broad level.
So before I answer that, Hemang, firstly, thank you for inviting me here. For me, it's something like a homecoming to IMS. I was way back in 1986, 1987, when I was doing my engineering. That's the first time I subscribed to the IMS course. And unfortunately, I couldn't get through I couldn't clear my interviews. I got an interview call from A, B, CL, XL, FMS. Can you believe this? 7 of them. But I couldn't clear the interviews. And then I came to Mumbai for a job. So a funny incident, when I came to Bombay first, I wanted to subscribe the IMS course once again. So I went to your Bombay Central building, and it was AC house, AC Tadeo building.
Correct.
So I'm not sure whether you would know, Mr. Rane used to be.
Correct. He's the founder.
Yeah. So I guess what I had brought a demand out for me to subscribe the IMS course again. So I went to him, and he was impressed that I'm doing it again. And while I was filling the form, I told him that why don't you give me a discount because I'm doing it for second time. And he was generous enough to give me a discount. And guess what? When I was paying, I had the demand out for the full amount. So he told me that you actually brought in the full amount, but you asked me for a discount. You're a smart guy. And then, so I have very fond memories of IMS, and I strongly believe that whatever I am today, a significant part of that is because of IMS. Luckily, I could clear the Excel exam in 1991, and I did my MBA in 1993. I came back to Mumbai in 93, and again I was associated in IMS in some way. I used to take some classes and all that, and over a period of time I got busy, and then somehow I lost touch with IMS. A few years back, my son, he was doing his ISB. So I'm a strong believer that you have to keep learning yourself again and again, right? Okay. So I thought, why don't we do MBA again, or why don't you not MBA again? Why don't you take the CAT test again? And somehow something came in my mind that I should attempt the CAT again. And then I connected with IMS, and then I met
Mr. Kamlesh.
I met Kamlesh, and then it all went on, and then I couldn't take the exam. I'm taking it next time. Okay. So then I got introduced, and now I'm in front of you. So again, thank you very much. If I can be of any help to the IMS community, I'll be more than happy to.
Our pleasure, sir. So like you mentioned, we have been here since 1977, and great of you to, always help students. I've heard you have taken classes, you have taken interviews in the past. So I'm sure everybody will benefit from this video also. Sure. So coming back to the episode, if you can, tell the students about your experience and about the career options available in finance in general.
So typically when we talk about finance, the typical picture most of the students have in mind, there's only one job in finance, which is a fund management. But actually think about it, finance is a very, very vast subject. Actually, you can have a sales and marketing in finance. So we hire so many MBAs who do sales and marketing to be working in a finance company. So let's not go there because that's more of a sales and marketing job. But you can actually make a career in sales and marketing also in a financial field. If we talk about pure finance, I would say there are two broad, you can partition it two broad ways. First is corporate finance. What does corporate finance means is that you're working with a company, helping the company with its financials. For example, if a company wants to put a project, then you need to arrange for the funds, you need to budget for it, there's some forex exposure, you need to hedge it, there's a working capital requirement, there's an equity raise. So all that goes in a pure corporate finance function. You're not, obviously all the markets are interlinked, but a good part of what your job is to help the company arrange for the finances so that the company can do its operation in a very efficient manner. I think in those kind of fields, a slightly different mindset about a bit about accounting, a bit about tax, and MBA will also help. But CA typically has a big role to play. And obviously, I've seen good MBAs also doing a good job there. So that's one part of the corporate finance. Unfortunately, I don't have any exposure on that corporate finance side. If you look at the non-corporate finance side, typically we partition the entire other side into two ways. One we call the sell side and one is the buy side. Now, it's very difficult to kind of actually quantify what is sell and what is buy, what is sell side and what is buy side. But to put in a very easy term, if you are managing money, you're buy side. Okay. If you are helping people who are managing money, you're sell side. So the buy side could be fund managers who actually manage money. You have research analysts working with the fund management team who's helping the fund managers to analyze companies and take a call. All those becomes a buy side job. On a sell side job, you can actually be doing the research from the sell side job, providing that research to the buy side fund managers. You could be on the trading, you could be on dealing, you could be on raising money for them. All that is a sell side job on the fund management. The good part is that all these jobs require very different traits or very different skills. For example, if you are in a investment banking, you need to have significantly more softer skills because you will have the full research team to help you with numbers and all that stuff. It's like connecting the companies with the market so that the companies can raise money, they can raise equity, they can raise debt. So you can imagine the skill set required for that may be very different when you are a fund manager looking at analyzing companies and investing in stock market. So you will have different skill set, some softer and some pure numbers. And therefore, whatever your skill sets are, you will have an option to work in a financial field. We keep saying that it is one of the most critical field in the economy. Unless you allocate finances, unless you allocate financials in a very efficient manner, the economy cannot do well in the long run. So for the economy to do well in the long run, we should optimally allocate finances to the sectors which it needs, and a good analyst, a good fund manager can actually do that. For me specifically, I had that privilege, and it was all by chance, that I could start from research, I could do some sales, and then I came to fund management. So I have seen a bit of research, a bit of fund, a bit of equity, a bit of fixed income, a bit of research, and I ultimately joined in as a fund manager in Franklin Templeton way back in 2006. And then I became the CIO, and now I head the company called Franklin Templeton Alternate. Alternate is a new field which is coming up, which is a very exciting field. We can talk about alternates a bit later in a more detailed fashion. So that's the entire gamut of services the employee or a student can aspire for, depending on the traits the student has.
So, sir, if I can summarize, can I say that research and fund management is on the buy side, which is going to be the focus of our discussion today?
So the research can actually be both buy side and sell side. Okay. All these booking houses, the significant large booking houses, who have their own research team, who will do research and they will help the fund management team to say, guess what, our research team says that this sector is going to do well, this company is going to do well. And if the fund manager actually believes it, so typically that research from the sell side is there to garner business from the fund management side, from the buy side, saying that we are doing research for you, please give us more business on the broking side. When you're doing research on the fund management side, on the buy side, you're doing purely to help your fund manager to do well. Okay. So research can be both buy and sell, and more or less that will entail the same traits and the same.
Okay. So can I say that research done for the fund manager of that particular house itself is on the buy side? Correct. Research done when it is for external audience, it can also be fund managers, it's on the sell side.
Absolutely.
Perfect. Sir, so can I say that you have experience both on the buy side, on the sell side, and also you said you have done some part of sales?
Right. No, frankly, my experience everywhere has been on the buy side. So I started career way back in 1993, and incidentally, that was a time when the private sector was coming into mutual fund. Till that point of time, you had UTI, you had some public sector banks into mutual fund. 1993 was the time when the private sector, it was getting opened up for private sector. So luckily I was there, present. So now we keep thinking so much about how should my career take shape. But I can tell you, Hemang, that it all depends whether you get the opportunity at the right time and at the right place. So for me, it was purely incidental. That was my campus job. And I joined SBI Mutual Fund at that point of time. And the first project given to us was in equity research. That was on the buy side. So we had a big fund management team, and the equity research was supposed to meet companies, analyze the companies, and give recommendations to the fund management team. So luckily for me, I was there for 2.5, 3 years. I must have visited some 100, 150 companies. It was a steel company, an aluminum company, and a hatchery, and refinery. So it was a fantastic experience. And because I had an engineering background, I could connect with those companies because I knew what was steel making. I knew how aluminum would be made, and so on and so forth. So that engineering background and the site visits, it was a fantastic combination for me to get my fundamentals very clear on research, saying how does the industry function, how does the company function. I can tell you one big difference. There were some 8 or 10 people along with me. You won't believe 7 or 8 of them actually quit over a period of time. So what excited me didn't excite them. So therefore, we should strongly believe that every individual is separate, is a very different aptitude and attitude. Depending on your mindset and what you like, you can make a good career on it. For me, incidentally, I like that, and therefore I continued in the space for last 30 years.
Oh, interesting. So, sir, suppose somebody fresh out of a B school, let's say, has to join the research team, maybe wants to get on the buy side. How would it career span over the next 5 to 7 years? Obviously, like you said, there will be going to be an element of opportunity, luck, if I can use that word.
Right.
So how would the typical career path move for a fresh B school graduate now?
So for a B school graduate to come on a buy side research, frankly, it may be a bit difficult to begin with, because typically the fund management side or the buy side would want someone who has already some experience on the research side. But it's not a case in every case, but typically that's what the fund management team or buy side would aspire for. But there are many companies which also hire from the fresh on the fresh side. So if you are a fresh grad, you need to show deep interest prior to applying for a job, that why should you be taken on the research side. And nowadays it's so easy. You have so many courses on NISM, courses on research. You can track the market very closely. There are all these YouTubes and podcasts. You should keep following the market significantly ahead of applying on a job. And if you're actually interested, I'm sure you will be doing it while you're studying. You look at the market, so you read commentaries, you follow some fund managers, podcasts, and so on and so forth, which means that when you apply for a job, you have to be reasonably sure that I have seen this in some way, I like it, and that enthusiasm should get reflected when you apply for a job. Because the expectation is, there's no expectation that you're expert in any area because you're just applying for a job. But the expectation will be that you are enthusiastic enough and you've been following it, following the market, done some courses. I think that helps a lot when you apply for a first job. And when you get a first job in a buy side research, typically you'll be allotted one sector. For example, you say from now onwards you'll be analyzing or helping a senior research analyst on the financial sector side. So all this number crunching and meeting companies and reading annual reports and all those stuff and following the quarterly results, all that may be your first job for you. And you, along with the senior research analyst, will actually prepare a report which goes to the fund management side. Over a period of time, you will realize that, yeah, it looks very interesting. I'm very interested. And among this, no end to this learning, right? It's not a 8-hour job. It can be actually a 24-hour job. There was a time when earlier India was a very kind of secluded market. Now it's all linked with globally. So what happens to US gets impacted in India. So when India sleeps, the US is awake. So if you're actually interested in the markets, you will actually track so much, right, of what's happening. It will get reflected in your work. So the key trait, according to me, that you should be strongly passionate about markets. If you do that, it will get reflected. Then you get one sector. Over a period of time, if you show good results in that, you will be given multiple sectors. So in 5 years, mostly say you'll cover 2 or 3 big sectors. And then over a period of time, you need to decide whether you want to continue into research or you move to actually managing money. I have seen some research analysts who are hardcore research, and they've been doing this for the last 30 years. And they are expert in the field, and I'm sure they get paid extremely handsomely. So there are some research analysts whose voice matters significantly more than a fund manager, because that's the reputation they have carried for the last 30 years. But some of them move to the fund management side. saying that I've done research for so many years, I understand so many sectors, and I can actually manage money. And then you move to the fund manager, or you become a fund manager over a period of time.
So can I say that maybe somebody who wants to get onto the research team first will have read a few research reports, would have tracked the market before, let's say, or during the MBA before applying to such a job?
For sure, I think if you apply for research analyst job, and if you don't track market, you may be the smartest on quant, right? But if you don't track markets, if you don't understand the basics of the markets, the expectation is that when you're applying for a job, at least those basics will be taken care of. Why? Because all the options are available today, that if you're actually interested, you would have gone through all of them. So many of the students I have seen actually do the CFA while they're graduating, including engineers, right? For example, my son he's an engineer, and he was doing his CFA, and he used to come and keep asking me queries or doubts on CFA. You won't believe, I did my CFA 3 years back, at the prime age of 54, 55. I did my 3 levels of CFA. I think CFA is a fantastic course. If you are actually interested in making a career investment, I will strongly recommend that you take the CFA along with your studies, so that once you finish off your MBA, if you have a CFA to boast along with it, I think it will help a lot.
Oh, great. Sir, so I gather that to be a fund manager, some experience in research is almost a must.
Essential. Yep. So it's essential.
So how many years, I think this is the question that most people want to hear, how many years does it typically take for one to become a fund manager?
Again, you can't quantify these things because it all depends on student to student. But I will broadly say that, say 8 to 10 years, because you must have seen various sectors. Because once you're a fund manager, you have a research analyst team to help you. But you should be able to say, I like this sector, I like this company. And Hemang, there are 5,000, 6,000 companies listed in India. There are so many sectors. If you need to take calls on those sectors, you should have an experience on all those sectors. So typically it will take good 8 to 10 years before you have covered so many sectors that you can actually start managing money. As I said, it's not a natural move. Somebody can stay as a head of research or the research analyst for very long time. It can be fantastic career in itself. I have met so many research analysts who are so senior that the industry houses kind of speaks to them to take their view. If the industry is going for expand, if a company wants to expand or launch a new product, they will be in touch with the research, because the research person has seen so much of research, and not only in India. If you are a good auto analyst, if you're a good auto analyst, you must have tracked auto industry in China or in Korea or in US. So if an Indian company wants to do something, it's not rare that they will connect with the research to understand what he or she thinks about the market. So research can itself be a fantastic field. If you want to come to fund management, I think it will take maybe at least 8 to 10 years before you become a fund manager.
Okay. Since you spoke about the research person knowing the industries across, is it a given that he should know how to read the balance sheet, should know how to read the profit and loss statements, or that can be learned on the job?
Yeah, so you should know the basics. What is balance sheet, what is P&L, what are cash flows. But because you're applying for the first time, the expectation is that you will be able to think logically. You are smart with numbers. But no, you are not expected to draw a cash flow statement or something like that. But I think basics obviously should know. But if you're a CFA, along with when you're applying for a job, you would have learned a lot about cash flows and P&L and balance sheet, and also that person will stand out in the interview as compared to someone who is fresh, who may be one of the smartest one in quant, has come up with flying numbers on the MBA course. But a CFA or a person who has tracked investment, has done some analysis courses, that person will stand out in the interview.
So, sir, what I'm hearing from you is, if somebody is interested to be in the research and fund management space, along with the MBA, CFA is almost like a given.
I think it will definitely help for sure.
Sure. Like, we notice a trend, even amongst the IMS, there are a lot of people who tend to do MBA finance, at least who would have completed level 2 by the time they have completed their
I think that
MBA.
also shows, Hemang, that you're interested in this, right? So you're saying that I've applied for CFA, I've cleared 1 level and level 2. That also shows that you're actually interested in in that field.
Correct. So on a side note, when you were preparing for the CFA, how did you feel? Because you were already applying this and doing this for the last 30 years. So I am guessing the exam must have been a cakewalk for you.
So, my son still thinks that I gamed the system because I didn't study so much, and he's surprised at how did I clear the exam. So I kept jokingly telling him that after 35 years of working, if I need to study for the exam before clearing, there's something wrong with me, right? But having said that, it's a very, very extensive course. But the good part for me is because I have seen almost all of that firsthand. And therefore, it came a bit naturally to me, kind of how to approach those questions. But for someone who is fresh, I think you'll have to put a good amount of effort especially to clear level 2. My biggest problem, if you ask me, was not level 1 or 2, was level 3. You know why? Because level 3 is subjective, that you have to write answers. And the way I type is like, with one finger. So all the kids were looking around that who is this gentleman sitting there, and they are typing like this and I am typing. So that was the most difficult task. Other difficult task was to sit for 3 hours. I think it's a 3 plus 3, some 6 hours exam. So but sitting there at one place, which I'm not used to. Otherwise, it was quite fun. I will strongly recommend that if you're not done your CFA, I'll recommend that you should also, kind of attempt a CFA this year.
Sure, sir. I think I will have a look at it for sure. Correct. Sir, a lot of engineers believe that they're at a disadvantage when it comes to roles in research and fund management, precisely because of the requirements that we just spoke about. So do you think the engineers can, catch up while doing their MBA course? Obviously, CFA is one option available to them.
No, I'm sure engineers can definitely catch up, because engineers typically, we should not make a blanket statement, but typically engineers are good with numbers, and they have done all the. And when you are doing engineering, you are kind of looking at hardcore numbers, calculus, and so on and so forth, very logical way of thinking. I think all that definitely helps. But over a period of time, you will realize that when you are managing money, again, very difficult to put a blanket statement, but 50% of your job is quant, which is numbers, and 50% is beyond quant, because that quant, you can imagine over a period of time, the two fund managers who can get the same report made by analyst, which will have all the numbers, past and future. Now, to take a call, I have seen based on the same research report, one fund manager can take a call of buy, second can actually take a call to sell, not even hold. So therefore, it's not only numbers for sure, but numbers play a significant role to understand how the company is doing, how the company has done over the last so many years, probably how will the company broadly do over the next maybe 5-10 years. But the key thing is to buy or not in their portfolio is a very different ballgame altogether. So I think engineers will definitely they can definitely do good in a research job.
And sir, since aspirants are going to spend, like you said, on an average 8 to 10 years in the research teams, is it a natural move to move across sectors, or people tend to do one sector for the 8 to 10 years that they need to spend in the research team?
So again, there are two ways to do it. If you want to become a fund manager, then obviously you will have to span across sectors. But you can actually take a call that I want to be a hardcore specialist in one sector. I will be so good in that sector. So there's a saying that if you are very good in whatever you do, then there's, everyone is same. So there's a saying that the best cricketer and the best guitarist and the best cook and the best hairstylist, everyone can do very well in their careers. But so if you're very good in one sector and actually do that for many, many years, you will stand out, but you should have a passion to just do that one thing again and again. But I've seen many of them who want to span different sectors and then become a fund manager. So again, both the options are open for you.
Sir, so let me go back to the start of your career. So while you were in XLRI, or just before that in the year 1993, how did you get interested into this entire space of research and fund management?
So among for me, it was purely accidental. I was hired by SBI Mutual Fund and I was given that job on the research side. But once I went into it, obviously I got more interested, and then I kept following the market. I remember a couple of books I read at that point of time that excited me very much. Peter Lynch, one of the legendary fund managers, he wrote, I think, 3 books. The first book of his was One Up the Wall Street. Second was Beating the Street. And I think third is Learn and Earn, or something like that. I've not read the third one. But the first 2 ones, One Up the Wall Street and Beating the Street, I think these 2 books is a must read for anyone who is just fresh or who just getting introduced. Some other books, like there's a good book called Accent of Money. It's by Neil Ferguson. It's a history of financial assets. So it talks about how the entire market started maybe 300-400 years back and all that. So books like this can actually tell you whether, when you read those books, that I'm getting interested, I like this subject. So those were the things I got interested in. And for me, meeting companies at that point of time, as I said, from SBI Mutual Fund, I could meet hundreds of companies. I think that obviously excited me the most.
So, sir, let me cut to the present day. So, what's your typical day or week, at work?
So, you're asking me if I'm not doing a podcast, then what do I do in a day, right? So, typically, as I said, now all the markets are connected. So, you're tracking the market very, very closely. It means what all is happening in the market, what all news keeps coming up. Obviously, you keep reading about it, thinking about it, how it impact the companies which you hold. And there's so much information available across the markets now, that it's, as I said, it's a never-ending job. You can keep meeting and reading. And again, if you like it, then obviously it becomes so much easy for you. So a typical day for a fund manager is to look at, start with maybe reading the 5-6 newspapers you have. So understand what the broad things which has happened, because all small and big things can have direct or indirect impact on the market and on the companies which are holding in the portfolio. Whether it's a fixed income or equity, you would know that this will have some impact on my portfolio. The good part is that all the key changes which happens or the key announcements of the companies are posted by the companies in the exchange in a timely fashion. So if you're a fund manager, typically you will get research analyst report from the sell side, and there are plenty of them. There's so many of them. Maybe you will get 1,000 reports or 1,000 mails a day. Maybe I'm saying, right? That there's so many research houses, sell side, who's trying to give their view on companies, on industries, and so on and so forth. When the result seasons comes, then obviously when the results get announced, all the analysis happens quickly and it comes back, keep back into you. So typical fund manager will have a CNBC or ET Now, which is on in the room. And obviously you will have all these reports coming up and you have the newspapers and you keep reading and scanning through saying, can I get some information or can I make some, and a good part of that could actually be noise, right? Because every day the markets are moving up and down. A significant part of that will be noise and not linked to a pure fundamental reason. So first you need to move away from the noise, from the fundamental reason. You keep thinking, you keep debating with your team and looking for clues among all the things happening. Can I get something which is slightly ahead of the market? And according to me, that news or that happening can impact a company or the industry in a positive or negative manner. If it's a positive manner, and then obviously you ask a research analyst to kind of do some more work, and then over a period of time, if you get confident, you take a view based on that analysis that I need to go overweight on a particular sector, and if it's negative, then can I go underweight on a sector? So you can imagine so much of data is coming, so much of views are coming. So I keep saying on the same company, you'll have a buy report and a sell report, and both may be the top class research analyst. So for a fund manager to get 10 reports in a day, out of which 5 are saying buy on the company and 5 are saying sell, and you need to take a view, should I buy or sell? I think that's one of the most critical jobs you ultimately do. So I think as a fund manager, if you are not strong, if you don't have strong views, you will keep wavering around. Because today somebody is saying sell, and somebody says buy, the price goes up, you get excited, price comes down, you feel dejected. So you should have a strong view on what you're doing. But Hemang, the problem is, typically someone who has a strong view has a closed mind. And you require exactly the opposite thing in a fund management team. You need an open mind. So you can imagine the oxymoron. You need a strong view, but an open mind saying that I had this view, something have changed, or I made some assumptions which were not correct, and therefore I'll change my view and go from buy to sell or sell to buy or hold. I think I have not seen many fund managers who are good in both, to hold a strong view and keep open mind. If you do have that, I think that will definitely help in your career in the long run.
So speaking of the mindset of the fund manager, I'm sure with the job comes a lot of responsibility, and with it a lot of stress, because finally people are entrusting the fund house and hence by extension the fund manager with their hard-earned money.
Yeah.
Especially the markets these days being so volatile, I'm sure the fund manager is always under pressure that how will my fund perform, and especially people track the ratings. Okay, should I invest in this fund?
Yeah.
Should I enter? Should I exit?
Yeah.
So how do you manage this stress of handling funds?
I think, Hemang, that is very critical. I think the stress can be significantly high, especially for the senior level of the fund management team. I think it a lot depends on the company you work with. So if your company understands that it's very difficult to do good at all points of time, and therefore it's but natural that fund management team or some schemes can be performance can be very good, and then it will have maybe average time for some time. Occasionally can be also doing badly. I think if the company understands that investment thesis, it helps a lot to the fund management team. So I keep jokingly saying, if you're not a good singer and you open your mouth, I can make out that you're not a good singer.
Okay.
If you're not a good painter, and if you start painting something, I can make out that you're not a good painter. If you're not a good cricketer and you bowl one ball, people know that you're not a good cricketer. But guess what? You may not have any understanding of the market, but maybe for some time, you can outperform the best manager purely by luck and chance. Most of the people in the market, they don't know that they don't know. Right? Because they don't know that they don't know. If by luck they make money, they start believing that they have the skill set to make money. Forget about the stress which comes from the company and the sales and all that stuff. Your internal stress can be very high because you think you're not doing a good job. So it's a very, very stressful job. So over a period of time, I realized that a bit of spirituality can actually help a lot in this kind of field. So because you need to be calm when there's a noise outside, right? So that can only help if you are a calm mind. And for me, especially after the COVID and all, I think spirituality has helped me a lot to kind of make sure that you don't get overexcited and you don't get too negative when things don't go your way.
Sir, coming to the next part, these days with AI, so what is the impact of AI on the industry? Is it helping increase the number of jobs, or is it taking away jobs? And how do you or your team uses AI to make their work more efficient?
I think AI is a wonderful thing that has come up. I remember something similar came up when computers came up 30 years back. Before that, obviously, there were no computers. And what a computer could do was significantly more productive than what a typewriter could do or something like that. Then internet came. It became so easy to access information and so on and so forth. I think AI is doing something very similar. I think it's going to be a game changer. All the routine jobs, I think, can be done by AI in a significantly more efficient manner as compared to any analyst would do. So if you have so much of data available, for example, just as some example, you have this company results which comes up. The company hosts a call, and then about 1 hour talk about the results of the company. You can imagine if there are 5,000 listed companies, and if you need to hear almost many of them, obviously it would be a very, very tedious exercise. On AI, you can actually pick and choose what you want to hear, which part you want to hear, and if you want to get a summary, all that can be done with the AI with a significantly more efficient manner. So I think for research analysts, pure data crunching and data comparison becomes significantly easier. You have AI. But having said that, once the report comes out, once the data comes out, as I said, on the same database, you can take a buy call and I can take a sell call. And that comes from experience and your view going ahead and all that stuff. So AI, I think, on research can be extremely useful. And I think more and more companies are using it. Especially in the US now, I think the kind of capex that is going into AI, I can imagine today if the AI is so powerful, I can't imagine in the next couple of years how useful or how powerful AI would be.
So do you foresee in the near future a fund house which has only AI fund managers and an AI research team?
So I think there are techniques called quant techniques where it's not only say AI, or there's been before AI, the strategies were there. Those strategies believe that purely on numbers, without the bias of a fund manager, they can take a view and make a fund. And there's so much of algo trading which happens. And there are some extremely high-paying jobs in that, where you're actually taking views based on pure data in micro of second or nanosecond, depending on how the market moves. So that's one theory which says that works very well, because most of the mistakes typically, as they say in market, happens because of the greed and fear of the fund manager or the human who is managing the money. If you take off the greed and fear, maybe that you could do a better job. And who better than a machine to take that off the greed and fear? But some may say that ultimately numbers are numbers. If you need to take a view forward, then obviously you need human intelligence, you need some gut feel, you need to think out of the box, which a quant model may not be able to do. So the same quant model which was used by many fund houses doing a quant strategy, obviously that will get augmented when AI comes in. But having said that, it's hard to believe that there will be a time when there will be no fund managers and only AI managing the money. That is difficult to imagine as of now. But AI for sure will be a very, very powerful tool to help the fund management team.
So coming to the last part of the section, I would say, is there any myth that you'd like to bust today?
I think the biggest myth I can think of is that many people think that there are good fund managers who can predict the short-term movements of the market. I think that's the biggest myth. You may have spent lifetime in the market, but it's extremely difficult to predict the market in the short run. So don't follow anyone blindly who says that market is going to go up tomorrow and come down day after. I think that is definitely not possible to do that in this volatile market.
And sir, you mentioned books by Peter Lynch to be the reasons why you got or interested into this particular career path. Any other resources, books, videos, podcasts that you would like to recommend to our viewers today?
So I keep following Warren Buffett very closely. And I think anyone who is serious in fund management should follow him. He recommends these 2 books. One is 2 books by Benjamin Graham. One is called Intelligent Investor. Other is Security Analysis. I think those are very, very, he says those are the Bible for the capital markets. And then obviously your other big fund managers, you should read the commentaries of what the fund management team says. They're very good sites which gives views of their fund managers. I think all that is helpful.
Sir, your final advice to all the aspirants today, the career advice to all of them. Yes.
So first advice is, maybe I'm not the right person to give that advice, but according to me, choose a field which you are deeply interested in, you're passionate about. And if you are passionate and deeply interested, start doing something. For example, as I said, if you're interested in the markets, obviously you should start reading about it. And it's no harm. A small amount of money, you start investing now itself. Whatever small amount you invest in, that the experience you get is very different than investing in a mutual fund and doing SIPs. Obviously, that's in the long run, that's all very beneficial. But if you want to make a career, you have to have a first-hand experience, and it can only come when you invest your own money. You can realize that how things change, and that can have a big learning for you in the short to medium term.
So to all our viewers, I would say today it was a masterclass to know about all the careers in finance. Particularly, we deep dived into the research and fund management part of it. Along with the technical skills, Santosh sir also mentioned about the other softer aspects of the job, especially how do you manage the stress with the help of spirituality. So I think today we learned a lot about the entire industry, and I'm sure you have inspired a lot of people to look at their passion for the equity markets and maybe make a career out of it. So sir, thank you so much for your time. We are very grateful to you for your timeless wisdom.
So thank you, Hemang, and it was indeed my pleasure to come here. If this is not exciting enough, I'll tell you one more story which will be exciting for. So my son was studying in VIT in Vellore in the engineering college, and when he was there for 4 years, a year came when there was a heavy rains, and there was a huge amount of panic there in Vellore and Chennai. So he called up home saying, Dad and Mom, and there's everywhere there's flood, and I want to come back. So I told him that why don't you go to a hotel and check in. And he said, I went to the hotel, but they're all fully booked. Now, typical parent will be worried, right, that your son or kid is not getting a hotel. But guess what came to my mind along with it? Which hotel stock do you buy? Because, the hotels are getting full. Then he told me that all the flights are getting cancelled, that I booked a couple of flights, but they are getting cancelled. So obviously, as a parent, you're worried. But you're thinking, which airline should I sell? Because there's so much of cancellations happening. So once you have a fund manager, whatever information keeps coming to you, you have to keep thinking about how it impacts my portfolio. So good or bad news which comes up, you typically think of how is the impact going to impact me, and someone who can think faster and more clearer and implement those in the fund, they help it in the long run.
Thank you so much, sir. That story, I think, told us a lot about the mindset of a fund manager.
Thank you, Emma. Thank you very much.